Um, Good morning, everybody. Welcome to the latest Threepipe Retail webinar. This morning, we're going to share our thoughts and insights into Q4 planning as we come into the business end of the year and what is really a critical or perhaps even make or break for a lot of companies in terms of getting it right over the next few months. Today on the co-founder Farah Kudaruth and our head of insight strategy planning Marco Festive. Before I hand over to those guys though, a quick word from one of our sponsors, as they say. I've asked James Minter from Hannington Tame to come on and just give us a quick overview of what's going on in the market at the moment from sort of a people perspective. Obviously, there's a lot of news at the moment, a lot of brands pivoting to DTC and a lot of brands looking to upskill in some of their ability to sort of take advantage of that. And James is right at the forefront of that. So I thought it'd be really interesting just to have a couple of minutes from James as to what he sees going on in the market right now. And then we'll hand over to Marco and Farah. So James, over to you.
Hi, morning everyone. So this is a question I get asked a lot, and I always feel a bit guilty that we're, I'm going to give a very subjective opinion. We're not an enormous firm with huge, great statistics. So a lot of this stuff is anecdotal and may even be stuff that, is fairly common sense. But obviously we're in a situation at the moment where I see it like a game of snakes and ladders. There are some companies quite widely reported that are not doing very well, but actually in our sector of e-commerce and digital marketing, things are going super well. And there's a heavy proportion of companies either that were already set up brilliantly for e-commerce or were pure play e-commerce players who have probably grown their sales in some cases 5 to 10 times in 3 months what they did in the whole of last year. So there's quite a lot of good news around from that point of view. Obviously, there are other companies that have done really badly. We did I was basically embedded in Skyscanner doing a whole global integrated marketing team build at the back end of last year. They've had a shocking time. Actually, I can see their figures and they're bouncing back quickly, but they're nowhere near the levels they were yet, obviously, at the back end of last year. So obviously travel sector has been badly hit. Hospitality, not something that as e-commerce digital marketing people we tend to get involved with, but those things have been hit. But either pure play companies have done very well, or more traditional companies have seen their D2C channels absolutely skyrocket, and they're very, very hungry for people who have got some experience in that sector and are going to bring that experience into their business so they can keep scaling up that channel. So there's also this sort of existential need for people in that area. I think in terms of the supply to the market, Jim and the guys and I were talking about this yesterday. We really only work with client-side marketeers. Obviously, agencies have taken a huge hit over the last 6 months, and I think the market is to a degree not flooded, but there's certainly quite a lot of people who know what they're talking about in the market, saying, actually, I'd like to go to a client-side business, and that's not necessarily an easy move for them to make. But they've got a skill set that should work if you can change your culture from an agency to a client-side culture. The 2 clients we picked up last week, I think, are very emblematic of what's going on at the moment. One of them is a spread betting firm, hugely, like any really gaming company, hugely competitive digital marketing setup. And they are looking to expand their team globally with particular reference to mobile and app marketing coming up as a new sector in the market. And then the other one's a small retail business that already had an e-com arm, direct-to-consumer arm, and they've seen that that's the way ahead, and they're very hungry to hire a whole range of people from junior up to senior digital marketing managers up to sort of senior digital brand specialists. So that's sort of general overview. I think other little aspects, which I'm sure the guys will come on to a bit. I think SEO seems to become very popular over lockdown as people have tried to cut down their budgets, and SEO is seen as a very cheap but high ROI option. Yeah, so as I said, just to sum up again, snakes and ladders, I think there are a lot of opportunities out there. I think there's quite a lot of noise in the market with supply of candidates coming from the agency world. But the general trend is extremely healthy, and you know, this, as everyone said, this pandemic has accelerated the move to digital and the move to digital channels.
Cool, thanks James, that's helpful. And then Mark, I've just made you host so you can share the deck. So
yeah, thank you.
I'm going to hand over to Marco and Farad, who are going to run through our Q4 insights and trend predictions. If you would like to ask questions, we thought we'd do that at the end. There is the Zoom chat bar if you want to use that, or you can wrap up at the end with any questions you may have. But we'll try and keep that to the end because we want to get through it quite quickly and have a discussion if possible. So over to you guys.
Thank you, Jim.
Morning. Thank you very much.
I just want to make sure that I am sharing the right screen. Great. Thank you.
Great. All right, everyone. Thank you very much for joining us this morning. We're going to take you through some of our thoughts around festive media trends for 2020. All things being equal, we probably would have done this a little bit earlier. So like many people, we're a little bit late in our planning and doing it, but that's the nature of the beast. If we can move on to the agenda, Marco, please. So we're going to take you through, Marco and I are going to take you through four key areas. As Jim says, if you've got questions, please ask them in the chat box. Marco, your screen's gone to your notes. So overall insights in terms of what we're seeing from the marketplace. Mega sales, which is an increasing trend, and obviously giving what's happening with Amazon and what's happening with the economy is going to have more of an impact than it historically has. Where you should be from a planning point of view and thinking about, and a little bit on post-season, because obviously that's kind of quite important, and some of the biggest days for e-commerce are actually after the Christmas period has finished. So I'm going to hand off to Marco, and he's going to start taking you through some of the insights that we can see from the market at this moment in time.
Thank you, Farad. Sorry, I just want to make sure. So yeah, I think kicking off with insights, I think as James alluded to it earlier, I think it's true to say that obviously consumers have now adjusted to online shopping. If anything, what we're seeing is certainly demographics that they're probably slightly a bit older, almost reintroducing themselves to the online space. I think obviously as social distancing measures are still in place, with ever-changing rules occurring as COVID continues to change, online will be the dominant priority platform for customers to shop, compare prices, and then obviously, and for us to understand their experience. I think some of the stats that we've pulled out, show this, and they're not necessarily entirely representative of what's going on out there. But I think it's true to say that the large majority of retailers think that online sales will increase this holiday season, even compared to 2019 levels by some way. With just over half of retailers actually having invested quite a lot more into their e-commerce website upgrades through the summer and continue to do so. I think we had a conversation yesterday talking about how every Christmas there seems to be a retailer or two retailers where the site falls over on Black Friday. I think this is one of those years that simply cannot happen or needs to be avoided at all costs. And I think this is one of the key things that I think a lot of retailers are obviously aware of. A lot of brands are aware of. How important these big shopping dates will be. So these website upgrades and understanding volume and the volume that is expected, or allowing for that volume to come through in a significant way to be ready for that. Having said that, I think a lot of retailers are actually going to be relying on sales through platforms. as well. And I think just over half of them saying the same about social media and actually social commerce, as in users not necessarily wanting to leave those platforms to go through that funnel of the awareness, the engagement, understanding reviews, and getting deeper down that brand journey to a final purchase.
I think what's been really interesting on that point, particularly is certainly since April through to about now, the amount of volume that we've seen, as sort of James alluded to, in what I would call infrastructure investment. So improving websites, websites re-platforms, SEO projects, analytics projects, better data. That has been where a lot of the bulk of the investment has come. And even from our point of view, the analytics and the SEO teams have been the busiest, and actually pretty much as busy as they were before lockdown, in some instances busier than they were. And it's been the more external facing elements that have kind of calmed down a little bit. However, that said, we are now starting to see from planning from sort of August, September, that actually that marketing investment is coming. I think what's been really interesting, particularly over the last day or two, is it was always going to be heavily digital, but the need for fluidity, not necessarily having to commit too much to different things very proactively, has become very apparent. And so what we're seeing is, even after yesterday, the changes that we're seeing to people wanting to do more digital, less TV, or whatever that spread is still a moving beast.
I think one of the things that is also super interesting is that actually general trends about how audiences behave in recessionary periods. And one of the key things that we've pulled out is actually psychological audience segmentation becomes much more prevalent in these times. I think it's, that purchases depend on consumers having disposable income, feeling confident about the future, trusting in business, trusting in the economy. These things all weigh heavily, regardless of social status, regardless of where you live, regardless of family size. I think four main states, if you will, probably the best way to describe it, that we've highlighted is what we call the slam on the brakes state, the pain but patient state, comfortably well off, and obviously live for today. Slam on the brakes, it's really about obviously reducing all types of spending by eliminating, postponing, decreasing, or obviously substituting purchases. Although lower income consumers typically fall into the segment, actually higher income consumers can as well, if health or income circumstances change, be in that state. Pain but patient, it's really about people economizing in all areas, but less aggressively. They are the largest segment and include the majority of households unscathed by unemployment, if you will. As news gets worse, pain but patient consumers increasingly migrate into the slam on the brakes segment. So none of these states are all fluid. And obviously have different timelines associated to them from the consumer perspective. They're comfortably well off. They consume at near pre-recession levels, though now they tend to be more selective about their purchases. So with regard, if you think about high consideration, low consideration products, the way the expected timings on that, there will be fluctuation within those periods moving forward. I think the segment consists primarily of people in the top 5% income bracket, and those less wealthy but confident about the stability of their finances. That's key. Effectively, they're comfortably retired. And then there's always a live for today. They respond to the recession by extending their timetables for making major purchases. Typically urban, younger. They spend on experiences rather than stuff, and are likely to change unless they become unemployed. One of the things that we also wanted to highlight was actually talking about how different we expect 2020 to be to 2019. And actually, one of the surveys that we've pulled out was actually how far out people begin planning and thinking about Christmas, and when those purchases are actually made. We found that actually in 2019, just over 50% of people bought up to 2 to 3 months leading up to Christmas Day. About 30% bought 1 to 2 months out, and then the last minute merchant, 17% bought almost last minute. Hand up in the air for that one, because that's definitely me. But that's your typical spread. Our prediction actually in 2020 will actually is, I think before saying that, is actually in summary is actually the fluidity, sheer fluidity of how these numbers might change over time. There's always going to be the last minute people. That's always going to happen. I think there'll be less. But we think there'll be less of that, given the flood online, given the needing to have confidence in terms of last shipping dates, for example, as a factor there. Actually, we reckon about 45% of people will be taking more advantage of mega sale periods. So there'll be a concentration of spend around specific dates. And then a release after that period, waiting for the next date. So I think retailers particularly will be more focused on this, which obviously puts a different spotlight on the need to tease, how to tease, what the blend of that tease might look like. These things are quite key. And then there will be the 45%, for example, of economic uncertainty, weighing heavily on consumer sentiment. We again, something we discussed is actually we believe that the people where economic uncertainty is a major factor, and people taking advantage of mega sales, these numbers will fluctuate and will continue to fluctuate throughout the whole period, leading up until the end of the year, beyond Christmas and Boxing Day, actually. Farah, did you want to add anything there?
No, I think the only thing I was going to say with that moving 45% is funny because we had that conversation yesterday, and obviously this morning there or last night there were rumours that Mr. Sunak is going to try and launch a new kind of work scheme or kind of short-time working scheme. So I think that the reality about that movement is going to be predominantly driven by government activity or inactivity, frankly, because that's going to be the predominant driver of the level of comfort that people have about spending money or not spending money, and the broader economic picture and how they feel about that. So I think what we're going to find is that, and this is where that fluidity point becomes really important, is that the markers that move people's behavior may not be the traditional time-based markers that we've always had, which have often been about proximity to an event. They may actually be around the fact that there is a new work scheme in 2 weeks' time, which means that if we were promoting at this point in time, no one's buying anything because actually they want to understand that security of feeling 2 weeks later down the line. So having that ability to be reactive in terms of how you execute some things is going to be very, very important in terms of what we do or how things are actually done.
Yeah, I think that summarizes perfectly. It's looking at the macro environment within your own business, but also looking at the wider economic macro environment and looking for change there.
I think the only last I was going to make one last point on that is about last shipping dates. Given that so much more is going to be online, there are going to be a lot more people that are less believing that they're going to get their stuff delivered on time, no matter what you tell them. So trying to make sure you front end that process and even cutting off earlier. I think you often see a drop off in conversion performance 1 or 2 days out before that last shipping date. My suspicion is this year that drop off will be even more significant because of the lack of belief that those delivery systems are going to get to you, probably with the exception of Amazon and Prime and maybe 1 or 2 others that are well known for it. So I think that there's definitely some thinking about how you phase your timing, particularly towards the end of that period, that becomes very, very important.
One of the interesting things that has actually come out of COVID, which I think is really prevalent, and I think it's something that we're going to experience in like never before. Actually, is actually the surprisingly Gen X and Boomers actually dominating global mobile and e-commerce growth. And you ask why? Well, it's because they make 80% of the total online shopping population. But the fact that COVID has actually led people to rely more on technology, more on the online space, this has accelerated digital adoption. That have been encouraged to embrace e-commerce like never before. So I think it's super interesting to understand that, and it's also really important to think that, if you think on average 85% of people globally are shopping online, of these 80% is in the space, and also mobile. I think that's really important to understand that is thinking about your planning, to think mobile first, to think mobile first, social first, but know that you're capturing a more representative demographic than ever before as well. I think the other thing that we was, consumers will forever want answers, and how they got answers before with regards to products and reviews, and you know, the walking into a store and having professional advice from someone. And in the absence of that, the need to inquire will be there. So it's how businesses are able to adapt in the online space to be able to do that effectively, knowing that by streamlining their process, they're able to maximize their opportunities and leverage and continue to keep that relationship moving as smoothly as possible, particularly at those critical periods where users are going through multiple moments of truth. You know, that first moment of truth, second moment of truth, the trigger, and how that happens. One of the key insights that actually I wanted to highlight here was actually the importance of Q&As on product pages. You know, I think it's something that we don't talk enough about, and I think it's something that a lot of retailers, you know, even in the past have almost glanced over that sort of thing. But just how critical that will be in terms of managing bounce rates at that crucial period. I think you know, we've some of these stats are, you know, talking about 120% revenue per visitors lift on best-in-class sites at this point in the funnel. You know, reviews driving 159% lift in revenue per visitor at that point, and just being able to cover these bases and understanding how important they are to the overall picture. You know, you've done all the work to get them to that point. And also I think it taps into, you know, he's talking about that product research, social proof through reviews, photos and Q&A. It's actually building that infrastructure and making sure that infrastructure is as clean as possible.
I think that's, if you think about it realistically, right? If the marketing job is done well, given the nature of what's happening in the environment, you are likely to have more new people as a proportion of your site visiting your site than ever before. More people that are new to buying online that wouldn't have necessarily bought from you before. And actually the things that they're going to look for are going to be around trust and reassurance and all the kind of wrapper messages that make sure that makes that conversion get over the line. And for two quite different audiences, really, actually. One is the less experienced, I need comfort in terms of what I'm doing. And then the other is actually for the guys who are new to your brand, why should they buy from you as opposed to buying from someone else? And I think I've seen a lot of examples of people updating their Q&As with, you know, COVID returns now 60 days rather than 30 days, and you know, a new free delivery is this or whatever it happens to be. But I haven't seen anyone actually do a more proactive job of actually trying to use that as more of a sales engagement page, given the change of behavior. And I think that could be quite an interesting area, given how much more traffic those pages are likely to be getting in the next few weeks and months.
I think the other point that I wanted to make was actually talking about social shopping and how, you know, it's already intertwined quite significantly over the last year and a half, and I think as consumers do this research and go through this really key evaluation process, they're more often converting without leaving these platforms, and I think it's making sure that touch point is as strong as it can be. I think is really important. I think one of the obviously shoppable Instagram posts, for example, in the US, is a reality, and obviously this has gained traction in the last year with 41% of e-commerce brands actually using this feature. But 61% of brands expect higher engagement, which is natural. I think it's you know, particularly in the social space where it's unique in its ability to be where the audience is in terms of how they think about the product from an awareness perspective, you know, multiple levels of engagement and actual engagement onto advocacy, and be able to share and actually gain traction, and a brand's ability to gain traction in the urban space as well.
I think it's very, very important to have a look at what you're planning to do from an external point of view. And if your budgets for search and social this year are proportionally the same as they were last year, then you have probably undervalued the role that social is going to have to play going forwards in terms of actually driving consumer intent and customer behavior. And particularly if you're in sectors that are struggling a little bit more, shall we say, from an overall point of view, What we have really seen even through this period is if to engage users, it is very much about driving social, because that search volume isn't there in the same ways that it was. And actually you're having to compete harder against others for a much smaller share of availability. And whether that continues, we kind of have to see. But certainly there has been a real difference, I should say, from the clients that we've seen and we've worked with that have focused and been willing to focus a bit more on social than search in terms of their relative performance to each other.
I think one of the another point that I think is really key here is obviously, you know, return rates are a reality of operating in e-commerce. But one of the things that this lack of being able to go in store and try things on, as an example, I think it's important to factor in return rates, and particularly higher rates of return than usual, into your KPIs. How audiences are going to adapt to not being able to try something on, try something out, get some advice. That's going to prompt, you know, it's going to play on the threshold, on those free shipping thresholds, and how you think about that. It's going to play on how users might adapt to that, whether they buy more than they know than they can because they're making that threshold, but then the return rate is higher. Those KPIs need to be factored in, and obviously this varies from sector to sector. You know, clothing and accessories, I think, you know, has probably seen the highest average increase in returns since COVID, and you know, with electronics and shoes actually having quite significant rates as well. I think some of the things that we wanted to highlight is actually how to manage this in terms of how the consumer sees this on these platforms, and it's things like highlighting, you know, the scope, you know, which items are returnable, not returnable, the time span that those items can return by. I think, but also the you know, the exchange options for receiving payment back direct to their bank, store credit cards. Obviously, if you think about the psychological profile that we've highlighted in the past, these things will play heavy on how they're thinking about on whether they make that decision to purchase something or not. Yeah.
I think the one I want to highlight a bit is clothing and accessories and free shipping. I mean, free shipping or free shipping at certain thresholds has always been as a lever to drive an increased conversion rate, right? So I will drop my free shipping from 50 quid to 40 quid, and I will normally see a slight bounce in my conversion rate. If your returns rates are 20, 30, 40, 50% higher than normal, then actually the impact of free shipping is one that you have to be, or shipping value, you have to be very careful about. There is very definitively going to be people who will try to game that, who are only going to try and take advantage of free shipping, put the extra item in the basket in the full knowledge that they're going to return that extra item to you because all they wanted to do was actually get the free shipping in place. So I definitely think it's worth for particularly those in the clothing space to do your math on the value of shipping and shipping thresholds. And actually over Christmas, given the level of competition, if you think that it can bring down your returns rates, that subsidization might actually mean you should free ship everything, because fundamentally the cost of processing the return is going to be worth more than the revenue collected from the actual shipping revenue in the first place, and driving hearts conversion. So it's certainly that piece. I don't know how many people have looked at it in detail, but in that sector, I think it's a very, very important one, because returns rates in clothing are high already. And so we know that the impact of all that stock coming back post-Christmas, which you then also have to clear on sale, is a double impact in terms of not being able to sell it the first time round, and the secondary impact on margin and all of the back-end costs associated with processing that. So that's one I think, if you're in that space, you really need to think about very hard.
And I think also goes without saying that obviously people's safety is you know, particularly with businesses with a physical footprint, is to have in-store plans, keeping people safe at the heart of what you're doing. Some really encouraging stats, actually, I think from a consumer's perspective, is actually that something like 38% of people actually trust checkout staff to disinfect payment terminals after every use, and actually people are willing to wait, you know, a bit more time so that they're able to do that. You know, with some consumers also expecting technology solutions to be put in place. I think Sainsbury's, for example, is a classic example of allowing you to go in, scan as you shop, get to the payment terminal, pay and be off, but everything's done. So minimizing that time at the checkout till, I think it was a really good example of how they've managed to do that, and they did it very quickly, which again was kudos to them. But I think ensuring these measures are being taken to protect health, and not just for your consumers, but obviously for employees as well. I think one of the changes that I think came out yesterday is on employees needing to wear a mask now too, which is a significant change in that space. But yeah, incorporating and promoting lower content buying options, I think is probably the biggest point that I wanted to make here.
I think the reality is all of you will have seen what's happened to footfall in your different locations, and how in city centres it's probably worse than some high streets if you still have stuff in high streets. And the reality is it's going to take a bit of time to understand what the impact of what's happened over the last day or two actually means. But the probability is it's just going to make worse what you've already seen. So footfall is likely to go down. As the weather gets worse, combined with that, footfall is likely to go down. If you're predominantly reliant on city centres, you are almost certainly in very, very big trouble, which also then exacerbates in terms of what you need to think about from a mix and how hard you need to drive for your online business. Or actually, if you are someone that's got a decent spread, actually still getting people in stores in retail parks or in smaller high streets can become a much better form of how you deal with that product discovery, product touching, all the other bits and pieces that you want to be able to do. But there is definitively going to be what does your portfolio look like to how you need to think about the mix of activities that you do and how you talk to your consumers.
And I'll hand you over to Farah to cover mega sales.
Okay, so mega sales. This year is going to be more interesting than almost all of them because of what Amazon are about to do. But we'll get into that in a second. For those of us that were around in 2008, I think we all still remember what the impacts of economic downturns has in terms of buying behavior and drive to discounting, right? That's fundamentally what we're talking about. And what we're looking at the moment is that the economic downturn looks like it's going to expedite that over the short term. And let's be honest, in terms of discounting promotional activity, probably for quite some time to come in terms of what that behavior happens to look like. So you can see across the sort of core markets that at the moment, and when this was done, it's a few months out of date. So I actually would expect this to shift a little bit further in terms of big to dramatic impact being slightly higher than what we're seeing at the moment. But you have got a core, at least 1/3, and if I'm being honest, I think that's probably more like 40–45% that are expecting a fairly large impact. And you do have pretty decent proportions of people that are saying they're only going to buy on products that are on promotion, on discount, or on sale. And again, my expectation is those numbers are probably slightly higher now across the board. So the reality is that normally, in a normal year, you sort of talk about mega sales season starting with Singles Day in China, which is on the 11th, and all the way in the run up to Christmas and that sort of 6-week period. I think that the reality is, though, that Prime Day from Amazon is going to be at some point in early or mid-October. I think that we're just waiting for a date to be confirmed. And because of that, what you're seeing actually is a concentration of activity that is moving around that date, because on the basis that lots of clients and lots of businesses are thinking that's quite early in the shopping period. And for those early shoppers, you might be taking quite a lot of money out of the shopping process. So the need to compete earlier is going to be there. It might lull down again a little bit after that, but we shall see. There is definitely an opportunity, if you can, for Singles Day, which I'm sure many of you already know is the largest shopping day in China and one of the largest shopping days in the world. And Alibaba do more revenue on that day than Amazon do in a month. And so for those markets, even where you have possibilities, and it's likely that might even be through third-party platforms like Tmall rather than anything direct. It's important to understand what you can leverage from that point of view. We then move on to the sort of Black Friday, Cyber Monday. Marco's talked a little bit around the kind of requirements from an infrastructure point of view. What we are seeing, I'm going to steal Marco's thunder. I'm going to leave that till later. But what we are seeing a little bit more of is generally a longer run-in, a more phased approach to how you're trying to engage customers, not trying to be so directly transactional and building up to that time frame. The reality is, if you leave it too late and you leave it too direct from a digital point of view, you simply will not be able to compete given the sheer volume of money spent and the fact that most of the engagement work for others has been done. We are trying to get that cut through at the time. And I'll talk a bit about postseason a little bit later on, but I'm sure a lot of you will have seen in the retail world that often your bigger shopping days are not before Christmas. They're the 25th and 26th of December. And making sure you're well prepared for that activity, given that, that sort of post-season rush to go to the Boxing Day sales is unlikely to exist in any meaningful form to what we're used to. So making sure that we're well prepared for that is important as well. So as I've sort of said, Prime Day is officially the start of Christmas, which I'm sure Amazon are delighted about. And I think that one of the things that was interesting from last year was that Amazon saw around a 27% increase on a typical average order day. Now, given that you're moving that back to Q4 and you're moving it at this point in time, it is likely that that number is going to be significantly larger than the 25% odd uplift. Surveys of brands and retailers have basically talked about the fact that they need to be around that. So 90% are ready to spend as much on Prime Day this year than in previous years. Now, that's quite interesting, given that a lot of that spend would have been in the offline world, and Prime was always very good about newspaper ads and actually doing a lot of that. That's not going to appear. So actually, if they're ready to spend the same amounts of money, the framework in which that spend has got to go is into a much narrower pool of available media to actually get to that sort of audience. And then last year, at least 70% of shoppers bought at least one holiday gift during that period. So the expectation again is it will be something similar in terms of what that behavior looks like. So as I sort of touched on in the last slide, it's really important to understand that the idea that you are going to be able to drive those sales specifically during that short period of time without actually thinking about how the lead up and the build up to that time actually comes about is quite interesting. So there is definitely a phase around pre-teasing, which is from an external point of view around product awareness and actually engaging new people with your brand. There's a phase that's more about teasing, which is actually more about product discovery. Can I get you to spend time on my site? Can I get you to research? Can I get you to actually commit actions that show that you're in a consideration phase? So adding to a cart, checking out my FAQs for delivery, and then actually using a lot of that data during that sales process to actually then retarget and convert, because that's incrementally going to be the most cost-effective way of you being able to do that. It's also then understanding the three things on the right-hand side. So it's actually having products available on your site early enough so anything that you use that's algorithmic has some time to learn before it starts to perform. All these algorithms take some time to build enough data to understand what's going on. So if you try and force that learning period, all you end up is with quite a lot of inefficiency. From a sorry, Marco, can you go back one? Thanks. So from a phasing point of view, I've talked about the three distinct phases, but it's also understanding your consumers, right? There are going to be elements in your product range that are relatively easy, quick decisions from a purchasing point of view, normally driven by the purchase price. And there are going to be others that are a lot more considered. So there is always going to be an element of adapting that to what you see and within your own individual businesses. So, I mean, we wrote this slide a few days ago, but the reality is it's going to be more and more important to figure out how can you bring some of that physical store environment to the digital world to be able to help consumers understand your product in a better way. So this can be everything from using polls on something like Facebook to drive customer awareness, to understand what sort of things they're looking for, to build bespoke landing pages, or actually to create demos to deal with the questions and issues that arise out of that. Using a lot of the social platforms, including YouTube, so to leverage product expertise. So for example, laptop reviews to give advice on products and demos for skincare and makeup brands and the things that you feel like you need to touch or see in action, or actually even featuring creators and celebrities reviewing the products for you. But it's a bigger part now is about how do we create that connection to get people that level of product information and depth, and actually social and video combined together are going to be the sort of two areas where you can do that. I'm not sure if you guys have seen it. We've had it in previous decks, but Facebook have got some very interesting things you can do with augmented reality. So the ability to put makeup on yourself or change your lipstick or those sort of things that enable you to try and bridge that gap in some sort of way. And then obviously you're producing a lot of content. So what of that content can you take and actually rebuild and reuse from an advertising point of view to engage those people who don't engage with those formats live, again, to try and build that connectivity into the product, from the brand to the product discovery to hopefully the product purchase, that piece in between where the offline world would have been part of many people's journey in that final consumption. How can we use that content to make it for those guys, even if they won't look at those things in live or spend 5 minutes looking at a YouTube ad, so that we can use to bridge the gap when they've shown us some intent in our brand and in our products.
Thanks, Farad. So planning, that's the next phase. I think we've talked a lot, but I think obviously it's key to start early and be prepared. I think beginning to lay, I think a lot of the brands, particularly a lot of people on this call, I'm sure you'll have begun to lay the foundations early with regards to, understanding what your tracking infrastructure looks like, what your plans and placements and actually promotional offers might look like, the products you're thinking about, and how your portfolios will shape up as we cycle through this period. I think one of the things that we wanted to highlight is actually obviously the idea of understanding what 2019 actually looked like for you. As much as we expect this year to be very different, 2019 still provides a benchmark, still provides something to work from with regards to how expected performance, and actually using that to enable how you, as almost the start of how you might plan this coming period now. Your calendar might look something like this, effectively, where it's built on good planning, but obviously these three main phases are obviously preparation, moving into an awareness phase, and then finally to conversion. I think obviously we're near the end of September, so with regards to some of those key dates, there's a lot of brands that are already in mid-stride with regards to Black Friday, Cyber Monday, but actually general festive communication at the moment, and then we expect by the end of October, for a lot of these to move into turning on conversion points and conversion touch points to allow users to complete the cycle. I think it will continue. Obviously, it will be different for every brand, and it will be and awareness will look different for all retailers and businesses alike. But I think it's if you haven't started, which I doubt, September is one of those months where you really need to be thinking about the ramp up into Q4 significantly. If nothing else, at least have your infrastructure in place, your signals in place to allow you to make your decisions as in what will promise us to be a very volatile period in Q4. I couldn't put a deck like this together without talking about consumer buyer behavior. And I think it's really important to think about not only how people are feeling and how people are thinking, but understanding moments of truth. And I think in a physical environment where in yesteryear, where brands are able to leverage the physical form in store and online. We almost had to work out a recipe between what is it, how do people interact with the brand. I think what is true is it's always audience first. Research sees brands added and subtracted at that early decision, and consideration base. It's normally generally based on price, browsing, social media, but obviously performance and reviews. And that zero moment of truth at the beginning is really quite key, and something that a lot of brands strive for in the early days. What then tends to happen is, users then go into that first moment of truth, which is what we call the final shortlisting phase. It's based upon the evaluation phase. Products are viewed, reviewed, either online or on shelf, possibly together. But it's really between these two phases that the third phase has a massive impact on the next phase, which is the purchase decision. The goal there has to be to shorten or eliminate this rational consideration as much as possible by optimizing the associated experience. Given this associated experience is going to be online, the understanding what that flow looks like, and knowing that users are going to go through those two first phases quite quickly, and they're not necessarily obviously all on site. It's how you communicate up front, the placements you use, the tone of voice you have up front is going to be super important. But beyond that, there will, once the user actually receives your product, the unboxing and the using of the product, the consumer now has new information that they will then use to fuel for future brand purchases, as well as I think the ease and the means to share those experiences online. I think it all will accentuate your brand footprint. As they communicate their experience. The trigger is really the consumer's journey. At the end of it is how do we close that loop, which is really it's almost a lot of brands think that the phase actually ends when the purchase happens, and it couldn't be further from the truth, because it continues into a strong advocacy phase where people then share and talk, and I think how do they come? How do you bring them back? How does your CRM fuel that feel good factor, and how do you bring them back for a second purchase? I think will be super important to bring them back into that purchase decision again. Did you want to add anything there, Farid?
No.
So harking back to one of the earlier slides about these psychological breakouts and segmentations, I think it's every consumer group will have triggers based on how they feel, and categorize purchases based on what is essential, a treat, what they can or should postpone, and what is expendable, plus have timelines for all of these. It will be important to think about price points, streamlining product portfolios, improving affordability, and bolstering trust, all effective ways of meeting your individual goals. And I think the key thing here will be obviously about balancing and shoring up the short-term sales need with the long-term investment in terms of brand health. Apologies. So it might look something like this in terms of your initial plan, in your initial thinking, where you've almost broken your investment out into two separate categories. This idea of increasing awareness and discovery, and actually driving consideration and action, but actually have a very organized way of thinking about it in terms of what is your objective at every phase with every channel, and how you expect these channels to interact with each other. What the ad formats might be, what the combination of ad formats. I think for example, on Facebook, you might have video ads. YouTube, you might have the in-stream skippable versus non-skippable. I think the other key thing is, obviously, we talk about agility and we talk about the need to be flexible, is testing is something we've not talked about, and I think testing is something that is going to have, you're going to have to be making decisions with less data, but the need to maintain this and the need to keep this up throughout the period is going to be super important to make decisions quickly based on data, but understanding, but having a subset of different formats working in tandem to understand what works best relative to your objective, obviously. Understand your audiences very well, understand your targeting very well, understanding your use of data, and that first party data. What's feeding that first party data? What's feeding your prospecting lines? Are you giving users enough options to convert? Do you have varied touch points, or is it quite concentrated? When they get to the website, what does that look like? How do you expect them to flow? But also understand that there's going to be there's always going to be the left field consumer, the consumer who will float. And do you have those signals in place to guide them, to make them feel comfortable? Really, really key. By type, optimization, and measurement. I think measurement is probably one of the key things. It's one of the things that actually on this chart is at the end, but is almost the first thing you need to think about, and how that needs to proliferate throughout everything you do. So in summary, we've streamlined down to 5 key steps. Tracking, establishing that signal strategy for your business, built on the foundations of your performance, what you expect, knowing what you want to achieve, knowing how you're going to achieve it. Audiences. Put your audience at the beginning of your planning phase. It's not platform first, it's audience first. Platforms are second. And the tactics within move on from that. Discover your most valuable audiences. Use machine learning to target the best outcomes. Your platform then. Maximize your effectiveness. And I say effectiveness because it's very easy to think, I think a lot of marketers put effectiveness and efficiency in the same bucket, and they're really not. I think the effectiveness is a blend. Is a blend of emotional and rational consumer behavior, blending in terms of how we need to respond to that. And I think those two things are really key. So it is about effectiveness, scalable growth. Reach and the reach of your campaigns by ensuring your ads actually appear where your customers are. With realistic expectations of how they might perform. Your placements allow fluidity. I've talked about testing. I'm going to say it again. I think the testing and budget fluidity is going to be super key, because it's not saying this ad must do this, or this targeting line must do this. I think it's understanding that it's going to do that, but you're going to have varying levels of success in any one targeting line, and how that might then proliferate, and what you might need to do based on 2 or 3 scenarios, outcomes within a week, 2 weeks, 3 weeks of how you deliver. And then budget. Again, I think Farad would definitely have a point on this, but I think the key thing is obviously to maintain fluidity, be able to move budget around to maintain that effectiveness, depending on your performance.
Yep, that would have been exactly my point.
So I'll hand it back over to Farad for the last section.
Okay, I'm just going to talk quickly about post-season, and hopefully have a few minutes left for questions. The reality is that we all know, or we should know, that the week after Christmas, and often Christmas Day and Boxing Day, are some of the biggest shopping days of the year. And so making sure that actually we are prepared from a platform and from a marketing point of view for both these events is very, very important. And it's a real challenge this year, right, is the impact of not having the footfall going to the high street. It's very, very difficult to understand what that impact of that online number could be, but it's likely to be significantly larger than that. So it's not all lost if we do not have a great Christmas season, as long as we can understand that we should still be investing quite proactively and heavily, particularly from an external point of view, from that point of view from Christmas onwards in terms of what we're trying to do. Yes, it might be more challenging from a margin point of view, but to be honest, the reality is I think that we're going to find that in that run up to Christmas, that we are going to find more aggressive discounting tactics from pretty much everybody significant. which is going to make that impact less so than you might have seen in a normal year. I'm going to end on that point, just to give us a few minutes for any questions. Thank you very much all for attending and for your time. If you have any questions, do you want to take yourself on mute and pipe up?
It's super informative, thank you.
Go ahead. Go ahead, Deb.
No, I don't think we're going to get anyone, Jim, then.
I've got a question, actually, then. I'll go ahead. One of the things, actually, I just came to my mind was the role of vouchers at Christmas. Obviously, a lot of people gift vouchers. And I just wondered, actually, whether there's going to be a lot of uncertainty about doing that this year, given some people might have a little lack of confidence in the ability of the company or the long-term prospects of the company they might have previously bought vouchers from. Do you think that's the case? And if so, how will that money gifting be substituted in various ways?
You know, I think it's an interesting one. I haven't seen any data about consumer behaviour relating to that, but your suspicion, do I think it's probably right? Yes, I think it probably is, particularly given the fun and games with travel during the summer and not being able to get refunds and everyone getting vouchers instead. So I think there's going to be a bit of a challenge around that. But the reality is that, particularly from a lot of the e-commerce guys, and I can't talk about from the offline point of view, historically, the sales of vouchers or vouchers given as gifts from an e-commerce platform point of view, certainly for the clients we've worked with, has never been very high. It's never been a particularly significant thing that you would look at and try and drive in terms of what we would do. But I think there's also the other part to that is the financial one, which is often clients do not want you to drive voucher sales because they can't book that revenue now, because that revenue can only be booked when that voucher is actually spent. And so what you end up with is a lot of carried over revenue on the books, which doesn't count. So my suspicion is it probably won't be that different from in the past, where actually, from a promotional point of view, clients won't want you to do it because of how the finances are actually reported through from a compliance point of view.
But doesn't that sort of play into Amazon's hands, given the fact that you know that they're going nowhere? So you'd rather give Amazon vouchers that can be, you can buy products on Amazon. Wouldn't that be a different play on that?
Perhaps, perhaps, but I'm not sure how you are going to, or why you would want to make that a part of your customer communications. My vouchers are safe. I'm definitely going to be here next year. If you have to put that message into your comms in the first place, it says that people should be worried about you. So actually, I think you look at what's going on. I think you look at your product ranges, you play to your strengths. If that behavior you see changing in terms of like I say, from the clients I've worked with over the years, from an online point of view, it's never been a big number. It's never been a significant thing. I don't expect that to change. If anything, I think Jim's right. It's going to be less so. From an Amazon point of view, from others, if that's an intrinsic part of what they do, then so be it. But I'm not so sure it's there. And I'm also not so sure it's that important because I don't think anyone, I haven't seen anyone do any research on it, actually, in terms of a usage methodology. And if it was something that was a big concern, I would have expected the research to be done around that. If anybody else has seen anything, I'd be really happy to look at it, but I certainly haven't.
We've had a question, actually, which is sort of similar in that vein in terms of the role of savings clubs for consumers. You know, we've seen a lot of emergence of a lot of tech providers that enable that sort of part payment or savings ability. So what are your thoughts around that? I presume you're going to see an increased usage of those platforms and services.
Yeah, I think you absolutely are. And I think particularly if you're talking about things like a Klarna or the things that allow you to split and break up payments, do I think that wave is going to come much more significantly, particularly for, you know, Marco was talking about two audiences at the more sort of cash-strapped end of things or more concerned end of things about being able to spread the risk of what they pay. I certainly think that's going to be true, and those sort of services being available will become very, very interesting. I think the more traditional saving clubs concepts that have been around for, you know, saving up for Christmas and spending for those have taken a bit more of a knock in terms of one or two actually disappearing in the last couple of years. but do I think innovative financial ways of spreading payments through digital platforms is going to be something that is going to be an incentive for those audiences that are, want to spend on something but want to pay for it over 4 or 5 or 6 installments? Yes, I certainly do. I do think though, and there has been increasingly, although I'll be honest, I don't quite understand it, a number of consumers that start complaining about the fact they didn't realise they're paying over 5 or 6 payments and therefore haven't budgeted. So do I think you may have some knock-on effect of how you implement that and how you communicate it? Because I think that actually the young have been taking advantage of that a lot and not necessarily understanding what they've got themselves into. So if you're going to do it, I think that communication bit to make sure people really understand what they're doing is very important.
Does anyone else have a question while we're all here?
Fired all three were curveball.
Hello, mate.
This isn't scripted. No, I completely understand about the planning that we have to do for Q4. Yesterday was a great example of how we have to adapt, though, when Boris gives us those changes. So it's just going to be interesting with brands understanding that the planning phase we have for Q4 is going to be very different to what we've had in the past. So will it be about forecasting on a month-by-month, week-by-week, expecting what we can get? It's because there's going to be ROAS and ROI that we have to go back.
I think it's going to. I think the reality is it's a plan, and that plan's going to have to be relatively fluid in terms of how you execute it. And do I think you're going to find that you might need to slow down? You might need to move money around. You might need to take some stuff out of one channel and move it into another. Because the one big challenge that we don't know yet, right, is traditionally what you tend to find, particularly in that run up to Black Friday, is you get tremendous amounts of media inflation, right? Particularly on social channels, you get a tremendous amount of media inflation. Now, one of the things over the last few months that has really helped has been that actually lots of advertisers have stopped spending money, even on digital platforms. So actually, some of your marginal rates have become a lot more cost effective. So if you are a retailer that was actually investing in social over COVID, you've been paying a lot less per unit to actually drive those people to you because the amount of big advertisers that have just dropped out of that market space. Now, it's understanding how much of that brand money will come back in Q4 and how much of it will need to be digital. So do I think that we are going to be in a sort of a phase, particularly around social, where your ability to plan and predict how much things might cost you, even at this point, is very difficult. In a traditional year, we know that month window is a +20 to +30%, depending on who you are. So actually for planning, we're using +20, +30, sometimes +40 if we think it's a competitive sector, but that could be +50 or 100. But when are you going to know, Pratt? You're going to know when you get there.
Exactly.
And so there is definitely going to be, and I specifically highlight social because I actually think that's where the greatest challenge is going to be in terms of how you do that and how you leverage that. And there is definitely a bit for clients that don't have to be there. And we talk about this, we know with a lot of the sporting guys, is, over that time period, if you don't need to be there and there's no good reason for you to be there, then actually from a cost of acquisition or cost of maintaining a brand, you probably shouldn't be there. And you should be the people that drop out of that auction, that market, particularly over that 3-week window, because it doesn't make any sense for you to be there in terms of efficiency of what you're going to get from a spend point of view. So it is going to depend a little bit, but do I think it's going to be the most difficult one from having to remain fluid and understand the changes on a daily, every 3-4 days, weekly basis? Yeah, I do. I think it's going to be the hardest one to execute right that there's ever been.
Thanks.
Any more for any more? Otherwise, I'll wish you all a lovely day, and we'll send around a recording of the video, and hope to see you at some point, if not in person, virtually soon.